What if I told you that tracking your expenses in 2026 isn't about keeping paper receipts or manually entering every transaction into an app? Instead, it's about capturing the digital metadata that surrounds every transaction, making the process automated and nearly invisible. As biometric payments and auto renewals become standard, the way we track our spending needs to evolve. In this video, we'll explore 8 unique and highly effective ways to track your expenses in 2026. By the end, you'll have strategies that not only simplify the tracking process, but also help you understand your spending behavior in ways you've never imagined before. 1. Implement source-based budgeting. In 2026, managing your finances through the old method of categorizing expenses like food, rent, or utilities is becoming outdated. Instead, consider adopting a more effective approach called source-based budgeting. This method encourages you to track your expenses based on the source of payment rather than the type of expense. For example, you could dedicate one payment card for fixed bills such as rent and utilities, another card for daily flex, spending like groceries and entertainment, and a third card for subscriptions like streaming services or software. By using source-based budgeting, you get immediate, categorized feedback just by looking at your account balance. If your daily flex card balance is high, you know that you've been overspending in that area. This method not only reduces the need for detailed tracking and sorting of every transaction, but also gives you a real-time snapshot of where your money is going based on how you're paying for things. It's a simple yet effective way to stay on top of your finances without the headache of traditional budgeting methods. Additionally, source-based budgeting allows for more flexibility and less friction when making financial decisions. With this system in place, you can quickly assess which payment sources need more attention and which areas of your budget may require adjustments. You no longer have to sit down every month to categorize individual transactions manually, making it a more efficient and less time-consuming approach. It's a smart way to keep track of spending without overwhelming yourself with excessive data entry. 2. The Biometric Push Alert System. One of the biggest challenges in tracking expenses is the moment when spending happens. In the world of frictionless digital payments, thanks to technologies like biometrics and one-click purchasing, it's easy to forget the impact of our transactions. That's where the Biometric Push Alert System comes in. Set up your banking app to send you real-time notifications every time you make a purchase over a certain amount, such as $1. These push notifications serve as an instant sanity check and prevent you from experiencing spending amnesia. They act as a small digital interruption, forcing your brain to recognize the outflow of money at the moment it happens. In an environment where payments are seamless and nearly invisible, this kind of real-time tracking helps you stay aware of every transaction, preventing impulse purchases from slipping through unnoticed. Moreover, these notifications can help reinforce positive spending habits. By receiving instant updates on your expenses, you can quickly adjust your behavior and make more mindful choices, ensuring that your financial goals stay on track. Over time, this habit builds a stronger awareness of your financial landscape and reduces the likelihood of overspending. 3. Use an AI-driven subscription mapper. With the rise of subscription-based services, it's becoming increasingly difficult to keep track of all the recurring charges that can quietly drain your finances. In 2026, there are advanced AI-driven tools like Copilot and Rocket Money that can help you identify and track these zombie subscriptions, services you may have forgotten about or no longer use, but that still automatically deduct money from your account every month. By linking your accounts to one of these aggregators, you'll receive an overview of all the subscriptions connected to your bank or credit cards. These tools use pattern recognition to highlight services that aren't showing up on your daily radar, but are costing you significant amounts annually. By identifying these deadweight subscriptions, you can cancel them, freeing up money that can be better used elsewhere. This method not only saves you money, but also keeps your digital spending habits organized and easy to track. For the cash flow forecast over history. Looking at past expenses is useful, but it's equally important to forecast your future spending. In 2026, you can use sophisticated tools to forecast your cash flow based on your historical spending habits and scheduled auto payments. This type of tool allows you to track your burn rate over the next 30 days by factoring in bills that are already committed, such as subscriptions, utilities, and rent. Knowing what is already pre-spent helps you avoid the common pitfall of thinking you have more money available than you actually do. With this information, you can adjust your spending habits and make better financial decisions before overspending. It's a proactive approach that prevents the anxiety and frustration of coming up short at the end of the month. By forecasting your future expenses, you stay in control of your money, even before you spend it. 5. The Metadata Tag Hack. When making significant purchases, such as a new laptop or a high-end appliance, it's important to track not just the initial price, but the long-term costs associated with that purchase. In 2026, banking apps have a memo or tag feature that lets you add metadata to your transactions. For example, if you buy a $1,200 laptop, you can tag the purchase with 36 months, indicating that the expected life of this asset is 3 years. By tracking your purchases in this way, you can calculate the cost per month of your items, which helps you see the true financial impact over time. Instead of thinking of your purchases as one-time hits to your bank account, you can evaluate them based on their long-term value and cost. This method gives you a clearer picture of your financial commitments and helps you manage your resources more effectively. 6. Audit your convenience tax percentage. In the fast-paced world of 2026, convenience is often prioritized, and this can lead to hidden costs in the form of service fees. For example, delivery charges, premium service fees, or convenience tips can quickly add up, especially for frequent online shoppers or food delivery users. To identify how much of your spending is going toward these hidden costs, audit your transactions every month for fees related to delivery and services. By calculating the total convenience fees as a percentage of your regular food or shopping budget, you can determine if you're paying an unreasonably high markup for convenience. If, for example, 30% of your eating out budget is spent on delivery fees, you may want to reconsider your habits. This simple audit allows you to cut out wasteful spending and shift your resources toward more meaningful purchases, improving your overall financial health. 7. The shadow balance calculation. In 2026, with digital banking systems and automatic payments, your account balance often isn't as accurate as it appears. Pending transactions and delays can make you feel richer than you really are. To avoid overspending based on inflated balance, track your available-to-spend balance, not just the current balance. By factoring in all upcoming bills, pending transactions, and scheduled payments, you get a much clearer picture of what you actually have to spend. This simple shift in how you view your finances can prevent unexpected overdrafts or miscalculations that can throw off your financial stability. It's an easy way to ensure you're not misled by delays or pending transactions in your account. 8. The Weekly Reset Sunday Ritual. One of the easiest yet most effective ways to stay on top of your finances is to establish a weekly ritual. Spend 10 minutes every Sunday morning reviewing your top 3 outliers for the week. Instead of sifting through every single small transaction, focus on the 3 largest non-fixed purchases. This high-signal approach ensures that you're looking at the most significant areas of your spending, allowing you to make adjustments without getting bogged down by the small stuff. By identifying your largest outliers every week, you build long-term awareness of your spending habits and can make smarter choices for the upcoming week. This ritual doesn't require hours of tracking, but it keeps you accountable and in control of your financial habits. Over time, this consistent practice will help you avoid impulse purchases and stay on track with your financial goals. There you have it, the top 8 ways to track your expenses more effectively in 2026. From the source-based budgeting method to the weekly reset Sunday ritual, these strategies will help you take control of your finances and improve your awareness of your spending habits. If you found this video helpful, don't forget to like, share, and subscribe for more tips on managing your money in the digital age. Let me know in the comments which tracking method you're excited to try first, and I'll see you in the next video.